Let me show you something most loan officers don't fully understand: how mortgage rates are determined. There's a formula behind every move, and I'll walk you through it so you can learn to predict where rates are headed next. Welcome, and I'm Pam Sawyer with Metro Detroit Home Experts. Mortgage rates aren't just about daily numbers that pop up, it's more about why those numbers move. My job is to break down those numbers that shape your home buying future so you can make decisions based on facts. Understanding the Fed desk policy shifts, bond market trends, the mortgage-backed security gap, and key economic data gives you the edge most buyers and sellers don't have. Here's how lenders decide the rate and how you can predict it too. Lenders start with the 10-year Treasury yield, which will be your base. Next is the mortgage-backed security gap, or MBS for short. The mortgage-backed securities are investment instruments made up of bundles of home loans sold to investors on Wall Street. The MBS gap is the difference between the 10-year Treasury yield and what investors earn from buying mortgage-backed securities. That return depends on the MBS prices. That gap is either added to or subtracted from the yield, and that's what determines the mortgage rate. Knowing this formula turns rate changes into strategy, not surprises. Every morning I review the headlines that could impact the 10-year Treasury bond market, up or down. Then I review the upcoming reports that influence Wall Street's bond trading. These reports can cause the yield to spike or dip. For the first time since the pandemic, the jobs report have pushed the yield sharply lower, and mortgage rates followed. Then there's the inflation reports that can turn the bond market into chaos. Reports like the Consumer Price Index, or CPI, the Producer Price Index, or PPI, and the Fed's preferred measuring stick, the Personal Consumption Expenditure, or PCE report. Any one of these can send the yield soaring or crashing. Knowing these trends can help you lock your mortgage rate on a dip, not a spike. Now the all-important mortgage-backed securities, or MBS for short, plays a vital role in setting rates. Think of the MBS gap as a hero or the villain. When MBS prices are strong, this is our hero scenario. We subtract the gap from the yield. Since August, the Fed desk has taken a more active role in compressing the gap to keep rates in check. That's why rates started to decline in August. Sometimes the gap is neutral and the yield carries the load, and rates can stay the same, go up or down. However, when the MBS gap turns villain due to prices decreasing, or the Fed desk overcompresses the yield gap, triggering a forced gap correction to rebalance the books. Sometimes the MBS prices stay the same and the yield plummets, causing a larger gap. In the villain scenario, the MBS gap is added to the yield. And as you can see, there are more villain scenarios. That's why I share these daily shifts, so you can see the patterns in advance. I update the blog post around 11 o'clock with all the data that could cause the rates to rise or fall before the rate sheets are posted from Mortgage Daily News. Knowing these trends can save you thousands over the lifetime of your loan. By 1 o'clock, the numbers have settled, and I post the actual mortgage rate. This is the base rate, and it doesn't include lender points, down payment, or credit adjustments. Mortgage Daily News provides base rate sheets from several lenders, and you can review them all in the blog post. Reviewing these rate options matter because it helps you have an informed conversation with loan officers so you understand if you're getting a good rate and fees. This will be part of your interviewing process. Keep in mind, lenders do vary. Banks often use Freddie Mac or Fannie Mae, which can mean higher rates. Some lenders fund their loan with their own money, offering better pricing. And credit unions, they can be competitive too. Understanding how rates are set gives you the upper hand when talking to loan officers. Their main job is to process your application, not explain the market. When you know how rates are determined, you can compare offers confidently, because saving money isn't luck, it's strategy.